Fala pessoal, eu tô aqui com o Rohan, ele é o diretor de research da Global X e a gente vai falar um pouquinho sobre ETFs. Então, assiste esse vídeo que você vai aprender bastante sobre ETFs. So, Rohan, it's a pleasure to be here with you. Could you please start talking a little bit about yourself?
Yes, sure. It's great to be here. My name is Rohan Reddy. I'm a director of research at Global X ETFs. We are an ETF provider based in New York City with about 40 billion US dollars in assets, and we have a wide range of funds covering thematic investing, commodities, and income investing.
Well, if I could ask another question, can you please explain to our listeners what are ETFs and why can they be good investment alternatives to the average investor?
Yes. So an ETF stands for Exchange Traded Fund, and it's very interesting for investors today because the market has been growing quite a bit, especially with retail investors and those who are newer to investing because first, exchange traded funds are listed on an exchange, as the name implies, so it makes it easier to trade on a day-to-day basis. The second is compared to a mutual fund, often the tax advantages are better. And then third, which is maybe the most important point, is that the cost is lower relative to other vehicles and structures in the investment landscape. So for investors newer today to investing, we think ETFs can be a nice way to get access to a diversified basket of companies, which also lowers risk compared to single stock investing.
Well, that's great. And for a new investor trying to choose in which ETF to invest, what are the main metrics they should look, like management fees, price to earnings, dividend yield? If you could expand a little bit on that.
Yeah, sure. I think there's absolutely a few key factors investors need to look into when investing overall and then also in the exchange traded fund landscape. So first is, I would say management fees is number one most important for core allocations because oftentimes some funds are giving you access to similar baskets of securities, so cost can be a driving factor for plain vanilla and core types of allocations. The second is the actual exposure itself. So what types of companies are you getting exposure to? How is the index constructed? And is it meeting your objectives as an investor for what you're looking to get access to? And I would say lastly for investors, we've been seeing this more and more where there have been more exchange traded funds listed on exchanges. And so there is more offerings for investors. And so just doing due diligence in terms of who the managers are, what their background is, how much time they've had in history in terms of launching these funds and managing these funds. That's important in terms of experience at the manager level. And then lastly, I would say also, how do you like the market today? Do you think that this is an allocation that you should make an exposure to, or is it something that maybe you should change exposures from?
Well, great. Well, there are several players in the ETF industry, like the biggest ones like BlackRock and Vanguard that have huge scale, and there are lots of new ETF issuers competing in the industry. Can you tell us a little bit about the competition in the ETF industry? What differentiates a new ETF issuer that's poised to gain market share and to bring a good product offering from ETF issuers and that, I don't know, do not get traction and cannot differentiate themselves from the competition?
I would say three major providers control the majority of the ETF market, about 90%. BlackRock, State Street, and Vanguard. Usually most of what those providers are looking to do is more on the core and plain vanilla allocation side. So whether it's getting exposure to the S&P 500, the Bovespa, some of the major indexes in the world out there, that's more along the lines of asset allocation. For newer ETF providers entering the space, we're looking less so to compete on cost and some of those lower cost vehicles and more what types of new and innovative products can you launch in the marketplace that are not currently there. So at Global X, for example, we are very well known as a thematic ETF provider, and thematics are a pocket of the market that are growing substantially with investors. So we're always looking for what investors are looking to allocate towards going forward and what they're interested in. And so for ETF providers today in the market, number one, ETFs are growing considerably, so it's a market that many investment firms want to get into. But second, where do investors want ETF products in? And that's how we ultimately look to compete in this space.
If you look at the S&P 500 in the last 10 years, some industries, I think if I remember correctly, there are 59 industries in the S&P 500. Few industries outperformed the ETF and some others underperformed. I think 26 industries inside the S&P 500 outperformed the average. How does an investor choose in which industry, if it's looking for a single industry ETF or maybe a sector or a segment or a country to get exposure in his portfolio? How do you differentiate sectors that have like tailwinds, good long-term perspectives, and are poised to outperform the averages from the dying industries or the maybe sectors that sometimes are the sector as a whole is growing, but the average return from that sector is not great. Like if you look at in history, like the automobile sector when it started, our aviation sector, from sectors that really gave great returns, like technology in the last 10 years. How do you, what are the main factors you look before structuring a new ETF or designing a new themed investment? How do you guys go about looking for these opportunities?
Yes, it's a great question, and I think it speaks to the risk-reward dynamics that investors are looking for. So number one, how much risk are you looking to take as an investor? A key metric of that is often volatility. And then also, what types of returns are you looking towards? Typically, bonds, for example, give investors lower returns than stocks. And so that's the first question when constructing your portfolio as an investor is, how much tracking error am I willing to take relative to a benchmark? And what tracking error means is how much am I willing to let the returns deviate relative to a broad market index or a broad asset allocation strategy. And so to answer your question in terms of how we look at this at the issuer level and also what we're telling investors, we typically like to construct portfolios that are a little bit more concentrated or nuanced in nature in terms of which pocket of the market that they're looking to target. So for thematic investments, they're usually going to be a sleeve of a certain sector. So for example, within technology, we might give investors access to robotics and artificial intelligence companies. So that's one part of the market. There's different ways of investing. If you want to take on less risk, maybe you invest in a basket of companies that are larger in nature or more large cap, or even just a larger number of holdings within a fund itself. And if you're looking to take on more risk, but also maybe have the opportunity for higher return potential because of, say, sectors that you think are going to outperform in the future or certain segments, that's where you can get a little bit more targeted with your ETF exposure. So the way we construct our portfolios at Global X, at least, is a little bit more targeted within certain segments, especially for thematic investing, because we do a lot of a research-driven process into looking at segments that are going to be the winners relative to the losers. We're not necessarily looking to pick individual companies in this because that's more risky, but we're more looking to do research into themes that could potentially have higher return potential in the coming years and decades.
Great. You guys at Global X, you have a very popular ETF that's focused in the uranium industry. Can you talk to us a little bit about the thesis behind the uranium and what are the long-term trends in this industry?
Yes, I would say in the Brazilian market especially, the top two most popular funds that we've been getting a lot of interest in is our covered call strategies, which are NASDAQ 100 covered calls, which is options writing, so derivatives. For some investors who are a little bit more sophisticated and understand that type of investing. But second is in uranium. And the reason is uranium has had a lot of really attractive tailwinds over the last few years. So there's been a lot more support from governments who have been more supportive of nuclear power and the policies around nuclear energy. So we've seen a lot of investors look towards government stances that have become more accommodative. So that's one reason. And then secondarily, I think there's a lot of major countries around the world, both in the developed markets and the emerging markets, that want to reduce their fossil fuel footprint. So they're looking at aggressive net zero emissions target deadlines, whether it's 2050, 2060. And so it's only in the next few decades when they'll need to meet these targets. And so uranium, one advantage of it is that it's the primary fuel input that goes into nuclear power, and nuclear power has no greenhouse gas emissions during operation. So already a lot of companies and countries like nuclear power from that standpoint. And then secondarily, what we've seen is that compared to other sources of energy like solar and wind, which might be renewable energy, but they aren't as reliable. So I'll give you an example. It's very simple. For solar, you need the sun to shine, and for wind, you need the wind to blow. If that's not always happening, solar and wind might not be as reliable just on their own. Uranium is a very reliable source of energy. So once you start the nuclear reactor and the power plant, usually it can generate a consistent source of large-scale energy over time.
Yeah, green energy is something, it's not an easy problem to solve, right? Because you do not only need the solar facilities, you also need all the transmission lines, right? That connect the place where the sun shines to all the country, and nuclear is not intermittent, right? You just you can access power at any time of the day. So when you're structuring an ETF like the uranium ETF, do you add only companies that are traded in the US stock market, like the stocks and ADRs, or do you have access to global companies all around the world in a single ETF?
It speaks to something that we are also interested for at the firm level and might be unique compared to other ETF providers. We are very global in nature at the firm. So not only do we envision that our products should be global in nature, but also we have global businesses like those in Brazil, for example. And so when we construct our products, we're always looking to have the most opportunities globally. And so even though many companies might be located in the US, we don't restrict many of our products to just being US focused investments. Most of our ETFs, including uranium, are global. And so we're always searching for companies that are exposed to uranium in the global market. So we have companies, for example, in the United States, but also in countries like Kazakhstan and Canada and Australia. So we construct it from a diversification perspective that speaks to sort of the benefits of the ETF structure too, which is you're not just picking individual companies or those that you think are going to be the winners and losers, but also you're getting a diversified basket around the world. So it limits risk maybe compared to one currency or one geography. And so that's another advantage of using uranium within the ETF structure.
Yeah, well, that's really interesting because an average Brazilian investor, well, we can access the Brazilian stock market. In recent years, it has become really easy to invest through the American stock market, but we did not have easy access to companies all around the world. Could you tell us a little bit about the benefits of a Brazilian investor to have companies from all around the world, different currencies, different sectors in his portfolio, and even through a investment vehicle like an ETF where you do not have to pick individual companies?
Yeah, one major benefit of investing globally is that it's a pretty basic tenet within financial markets investing, but the more exposures and the more allocations you have, the better it actually is in terms of risk reward and making sure that metrics along those lines stay in line. And so what we've seen for a lot of investors is that when you think about investing globally, for example, for investors within Brazil, you want to limit any individual one risk factor, whether it's currency, geography, companies. And so an advantage for investors in Brazil is that when you buy companies or ETFs or even other funds that are located either in the US or globally, or the underlying exposures are located globally, it gives you advantages in terms of risk reward factors. So you're limiting any one individual currency risk, any one individual regulatory or political risk factor, and then also, of course, the actual company returns themselves. So if you, for example, want to have exposure to a theme like uranium, doing so through an ETF is one of the most prudent ways an investor can go about doing so. And it goes back also to the ETF structure, which is a lot of times in mutual funds, they may be actively managed in nature. And so you are taking on some of the risk of the asset manager itself who's picking the stocks. In an ETF, most ETFs out there are passive, including our uranium fund. So it's met according to a rules-based guideline, and that's how the companies are selected. So because it's through a methodology and it's rules-based and it's passive, you're limiting also manager picking risk.
Awesome. That's some good information. I know you guys also have a gaming-focused ETF, and the gaming industry is an industry that has great tailwinds. We have seen lots of changes, like PC games on a downtrend, and mobile games growing. We've seen like Microsoft trying to buy Activision Blizzard. We have Tencent, which is a Chinese company that it's huge in games, like the biggest in the world. Can you tell us a little bit about the trends you're seeing in this industry? What do you think about the industry overall? And if you could talk a little bit about the ETF as well, that would be great.
Video games and the entire industry started to grow considerably ever since the COVID-19 pandemic, when a lot of consumers were sitting at home and weren't able to engage in some of their daily activities that they had been used to. And so because a lot of time was being spent at home and not necessarily outside, video game growth and spending in that category was essentially supercharged compared to years prior. And so there's really been this secular shift towards playing more video games and spending within the video games and esports industry. And so we envision that growth is going to continue in those markets. And the good thing is, it goes back to the question we were talking about global investing and global equity investing. Video games and esports is not just limited to one specific country or one area. So we've seen growth in video games in the United States, in Japan, in China, and even in Europe as well. And so because you're investing in companies, for example, across the globe that might have exposures in this, that's why video games is a very attractive theme too. And so we've been seeing also, in terms of how ETF construction is done in this area, that there's different ways of going about doing it. There's a few ETF options. The way we like to do it is through a pure play approach. So you mentioned, for example, Microsoft and Activision Blizzard. Microsoft, for example, is traditionally like a hardware and a PC company, but they've been expanding into a number of different areas, whereas Activision Blizzard is like a pure play type of video game company. And so we're looking to pick companies in our ETF that have a pure revenue exposure line, which we categorize as greater than 50% of revenues in the video games and esports industry. And so that's how we construct our ETFs, whereas other companies might have more ancillary or smaller exposures in terms of revenue towards the video games line.
Okay, so Microsoft would not be included in the ETF.
Well, we'll have to see, for example, after the Activision Blizzard M&A transaction closes, but that would be an example of a company maybe that has diversified lines of business.
Okay. I know you guys at Global X also have some ETFs that are country focused, like some countries that are a little bit controversial, like Argentina. if I'm not mistaken, you also have a Greece ETF. There are lots of value investors. We here at SUNO, we are value investors that focus on distressed countries and distressed opportunities. Could you talk a little bit about where did the idea of building an Argentina ETF or Greece ETF come, and what is the thesis behind it?
It goes back to the point about democratization and the ETF structure itself. And when you combine those two things, that's what a lot of access vehicles are looking to do. So one of the earliest stages of the ETF industry was giving investors access to broad market indexes like the S&P 500, NASDAQ 100, some of those major indexes that investors around the world typically have asset allocation towards. And so when you think about access markets globally, the next stage beyond that was how do you give investors access to a liquid basket of companies, but also in the ETF structure that trades on a daily basis on an exchange. And so we were looking to fill some of the gaps in those markets that were not necessarily there. So you mentioned markets like Argentina, Greece. Those are a couple of the early examples of markets where there was not an ETF offering for investors, and we looked to step in and give investors access to those markets, which are typically a little bit harder to access, either because they're smaller cap in nature or there might be a little bit less trading volume. And so that's why we ended up launching some of those ETFs, as well as the fact that we really believe in the long-term potential of these companies in those countries, like in Argentina and Greece. And so for value investors today, a lot of international markets are trading at steeper discounts than the US markets. And so for investors who are looking for potential opportunities in the short to medium term, this could be an area in international markets like in Greece and Argentina where you can potentially capitalize.
Nice. Do you know if, like in Argentina ETF, the companies, the holdings of the ETF are only Argentinian companies listed in the US, or are there companies that are only listed in the Argentinian stock market?
So it's mostly basically companies invested in the US market, just because those are the most liquid and they might give it better access than the local Buenos Aires exchange. But basically a lot of the return stream profiles are along the lines of what those locally listed companies might be. The main difference potentially being currency exposure, whether it's like local pesos or US dollars. But the key point here is that these are access to companies that, even though they might not be necessarily fully local or fully ADRs or fully listed on some other exchange, that these are basically representative potentially of what the Argentinian economy might be.
Great. Okay, for the last question, here in Brazil, we can access ETFs through ETFs traded in the Brazilian stock market, and also through ETFs BDRs. Can you tell us a little bit about the differences between those two options?
Sure. We have been pretty actively launching BDRs on the B3 exchange in Brazil over the last few months as we've entered this market. And so we now have close to 30 BDRs through the program. And one of the key advantages of BDRs is that, number one, they give you, through a different exchange, more access to some of these vehicles that might be maybe only in the US or the UCITS markets. But secondarily, they have key advantages like maybe receiving dividends or differences in management fees. And so for investors who might have been within the ETF market in Brazil, there's certainly some advantages, but also differences to be aware of, whether it's lack of dividends or dividends that get reinvested. And so these are some of the key aspects. I will say also there are other vehicles that some investors, maybe either in Brazil or those who have access to the global markets, can explore, for example, in the UCITS markets with accumulating versus distributing shares, and even through the US, which might have more secondary market volume. The BDR program in Brazil also has market maker programs, and we use market makers over here to create markets in that exchange.
Well, that's great. I hope you guys liked it. I've enjoyed it very much. If you want to say a few words to
Yep, thank you very much. And we think that as Global X, that the Brazilian market has a lot of great potential. And for investors who are either newer into investing or who are very sophisticated, the ETF structure and some of the providings from Global X can be a very unique way, especially through the BDR program, for investors to get access into certain markets they might not have had access to within the Brazilian market.
It's been a pleasure, Rohan. See you next time.